Good evening, traders. This is Brian with TraderShark.com, an educational website to learn how to trade the E-mini S&P futures. Today is Monday, April 2nd, 2012. The following are a few examples of trade setups that occur on a consistent basis. These trade setups are described in detail in the trading manual and in the live daily Shark Den, where we discuss more advanced trade setups. The market opened up this morning at 1401.75, represented by this white dotted line. We don't generally trade the first 15 minutes of the day from 9:30 till 9:45. Coming out of the no trade zone, there was a real nice pullback on price action, but it really didn't fit our rules to be able to get in on this particular pullback. But it did fit our rules to get in on this pullback right here at about 10 o'clock. We generally don't enter any trades around a news report. The news reports are pretty much non-eventful today, the ISM Manufacturing Index and the construction spending. Pretty clean trade. Target 1 and Target 2 were hit for a total of 8 ticks. Price action continued up. Now, how do you take advantage of a trade like this? In the trade room, we're also showing what's called a directional indicator, and we have a holding indicator. So I'm going to take what's called a tracking line. So let's back it up a bit where we can't see what is to the right-hand side of the screen. So we have our normal trade plan trade setup. We enter a trade here. Notice the vertical tracking line. Move to the right. And I want you to notice on the directional indicator, when the cyan line gets in between the bullish directional and the bearish directional, that this is a period of time you want to be holding until the cyan line gets outside of the directional indicator. As price action hits Target 1 and Target 2, then you start looking at your holding indicator. Holding indicator will allow you to stay on longer. And if you held onto this trade after your Target 1 and your Target 2, watch how they materialize. On the lower right hand side of your screen is a holding indicator. This is what says, hey, hold, don't do anything, bring your stop up. You can bring your stop up behind one of the moving averages. You can bring your stop to a static stop or a trailing stop of, say, minus 8 ticks if you wish. Once this previous high is broken, this establishes your new, where you would put your stop behind this low. We're continuing to watch our directional indicator, still indicates strong bullish. Price action continues to the right hand side. The holding indicator would have you remaining in the position, and then as your directional indicator crosses, your holding indicator remains green. This would be a consideration of getting out right and through this area. Does that make sense? Where your price action is. Let's see what happens. Continue through. Our holding indicator would still have you in the trade. Directional indicator would have gotten you out. Now the holding indicator gets you out of the trade. We also have, you can't see the anchor chart. The anchor chart had a nice trend line break. Gives another opportunity for a short for a total of 6 ticks. Remember, it's counter trend. So on counter trend trades, we don't go for a whole lot. The trend is obviously up. After 6 ticks, we would have scaled out. Continue on. Now looking for more opportunities to get into the long side. Nice clean pullback. We have what's called a trendline wave trade. Entry. Continuation on in the direction of the trend for a total of 8 ticks. Holding indicator is still strong bullish, so if you would weather a nice pullback like this, and then you get another opportunity for a potential long trade. Again, we're looking at our holding indicator, still remains strong. Look at our vertical line. This is where price action is. Directional indicator continues to remain strong bullish to the long side. If you scaled out here, you'd be out of your trade. Holding on longer all the way into our, let's see if it looks like we have another opportunity to get short here. We also ran into one of the hourly range high. Took an opportunity to get short. Again, very dangerous trade. Hit our target 1. Got stepped out for minus 2 ticks before we went into the no trade zone. Goes from 11:30 to 1:15 Eastern Standard Time. Lower volume, higher volatility. Market just was on a tear, continued to push to the upside. And we had no further opportunities for trades. I want to thank you for watching. To To learn more about these and more advanced trade setups, or to get a copy of the Trader Shark Trading Manual, please visit TraderShark.com. Thank you, and I'll see you in the Shark Den in the morning.